Wait for a while, there is a problem. Yes. Now I think the slides are visible to all of you. My slides are visible to all of you?
Yes, ma'am. Yes, ma'am.
Hello? Yes, yes. Okay. Fine. So today I'm going to discuss about balance of payment, right? So what is balance of payment? Can anybody tell me what balance of payment is? Uh, all of you might be knowing what is balance sheet, right? So for a country, balance of payment is actually a systematic record of all the economic transactions between its residents and residents of foreign country, okay, during a given period of time. Like all the international trades involve payments and risk, we all know, during during the international transactions. Okay, so a country earn money when it exports goods to the rest of the country. We all know whenever we export certain goods to the other country, from that country we will have some earning, and whenever we purchase some commodity or we do the imports, we will have some. Uh, we will have to make the payments. So in that way, the international trade gives a rise to indebtedness among the countries. See, if you see in the economic transaction are actually those transactions which causes transfer of value, right? I am saying a transfer of it causes transfer of value because whenever a commodity is being exchanged, is being sold to some other country, or when we are importing certain commodity, we are going to pay something or we are going to receive something. So that payment or that receipts is being maintained in the balance of payment account. So when the exports, when a particular commodity is being exported, or some services are being made by A country to B country, okay, then we will have some export receipts, and it's transferred to the country B. And so you will see that between the two countries there is going to be some payments and receipts, right? So if you have to, so balance of payment will actually show a relationship between the country's payment to the other country and its receipt from them. So balance of payment is thus we can say it is a statement of income and expenditures on international account. Like if you have to study about the components of balance of payment, then it shows all transaction in goods and services which relate to both the visible and invisible goods. So visible goods are goods like foodstuffs, car, computer, iron, okay, that can be seen when they cross the international borders. And invisible goods are those goods like services, like I have written, tourism services, or another important items. Among that invisible item in the current account is the receipt of interest and dividends on loan and investments in foreign countries. So it is by now very clear that there are visible and invisible item which is there, right? So
Ma'am. Hello.
hello.
Ma'am, can I ask one question, ma'am?
Yes, sure, sure.
Ma'am, for example, some Bangladeshi
Mhm.
businessman, if doing business with India, they have some money have deposited in UAE, Dubai, for some
Mm.
tax benefit. This is also called balance payment. This transaction.
Yes, yes. Any kind of transaction, if you are making any kind of purchase or export or import or any kind of money you are investing, or if you are purchasing
Yes,
some
ma'am.
commodity, or if you are making any kind of cross-border international transactions, then it is going to come under that, right?
Okay, okay, okay.
Now, if you will go by the current capital account, whereas the current account covers income earning and spending in course of trade, the capital account deals with the movement of long and short term capital, right? So, actually, we all know there are various kinds of transactions which are there. See, if you go by the structure of balance of payment accounting, transactions are recorded in balance of payment account in double entry bookkeeping. And each international transactions undertaken by a country will result in credit entry and debit entry of equal size. So as the international transactions are recorded in double entry accounting, the balance of payment accounting must always be balanced, right? It means that the total amount of debits must be equal to the total amount of credit. The the balancing item errors and omissions must be added to the balance of payment account, right? So by conversion, the debit item and the credit item entries will with a minus sign and with a plus sign respectively. So you will see that the goods and services accounts like unilateral transfer accounts or long-term capital accounts like short-term private capital account or short-term official capital account. So these are going to be, you will see for for these categories, specific types of transactions are shown in the debit and credit side. If you will have to distinguish that what should be included in the debit side and what should be included in the credit side. So in a way you can say that in debit side you will include all the imports of the goods, imports of the services, right? In the credit side you will include all the exports of goods and exports of services. Now, if you'll unilateral transfers like gift made, that will be debit side, and unilateral transfer gifts received, that will be added to the credit side. Increase in the long-term foreign assets owned by the home countries, private citizens, and government will be the debit side. And if there is a decrease in the long-term foreign assets owned by the home country and citizen and government, that will be credit side. So in a way, there is a long list where you can include the debit and credit side. So particularly right now, I'm discussing that what are the categories, that's like category 1 and category 2. There are different categorizations under which current account will be maintained. So current account actually accounts the import and export of goods and services and unilateral transfers. The components of current account, there are actually components like that, like I told you, export and import of goods, or which you call it as mercantile transactions or visible trade. So a major part of transactions in foreign trade is in the form of export and import, we all know. Okay, export and import of visible items. So if you are making any kinds of payment for the import of goods, it is to be written on the negative side, that is debit side. And if you are earning any kind of receipts from the exports, if you are earning anything out of the exports that you are doing, of any commodity in which there's a comparative advantage, that is going to be shown on the positive side, or you can call it as a credit side. So balance of these visible export and import item is known as balance of trade or the trade balance. Now, like I've told you, export and import of services also will be the part of current account. It includes export and import of services. Export and import of services will be visible or invisible? It will be invisible, right? Because services we are not able to see. It includes a large variety of non-factor services, which is known as invisible item, like sold and purchased by the residents of a country to and from the rest of the world. Payments either either received or made to the other country for the use of services. Services example, like services are generally of if you talk about the international transactions, services will be of three types. Like shipping services can be there, banking services can be there, insurance services can be there. So payment of these services are recorded on the negative side and the receipt of on the positive sides, right? So by now I've discussed that in the components of current account. Components of current account में मैंने पहले क्या बताया? Export and import of goods, okay, which are visible trades. एक्सपोर्ट एंड इम्पोर्ट ऑफ सर्विसेज दैट इज इनविजिबल ट्रेड. और तीसरा जो होता है वो होता है यूनिलैटरल और यूनि रिक्वेस्टेड ट्रांसफर्स टू एंड फ्रॉम दी टू एंड फ्रॉम अब्रॉड. लाइक यूनिलैटरल ट्रांसफर इसमें आता है लाइक गिफ्ट्स, डोनेशन, पर्सनल रेमिटेंस or other one-way transactions. This refers to those receipts and payments which take place without any service in return. Like if you're getting some gifts, if you're getting some donations, that is not out of any services that you have given or not out of any goods that is being transacted. Okay, so receipts of unilateral transfers from the rest of the world is shown in the credit side, and unilateral transfers to the rest of the country. That means if you are making any, if you are giving a gift, donation, okay, then that will be included in the debit side. Okay, so if something going from like something which is being transferred to the rest of the country, that will be debit. And if something coming to you, any kind of receipts, any kinds of donations, any kinds of gifts that you are getting in the form of unilateral transfer from the rest of the country, that is going to be included in your credits. So this is just now. If you will talk about the in deep, if you want to discuss about the different capital account, see, I have already told you there are different categories, like category 1 and 2 I have discussed. If you will go deeply in current account with category 3, 4 and 5, that will include loan, like borrowing and lending of funds are divided into two transactions. See, borrowing and lending, they can be a private transaction. What are private transactions? Private transactions are those transactions that are affecting the assets or the liabilities by individual and business and other non-government entities. Okay. For example, I'll just give an example to you. All transactions related to borrowing from abroad by private sector, and similarly if you are making any payment of loan by the foreigners are recorded on the positive and credit side. So there are different categories like category 1, 2, 3, 4, under which the different kinds of transactions are being made. There are other transactions also which are called as transactions affecting the assets and liability by government and its agencies. Like if you are making any kind of borrowing from abroad by the government, and similarly if you are making payment of loan by the foreign governments are recorded in the credit side. So there's a long list of debit and credit, like commercial borrowing will also be accounted. Foreign investments, if they are investment, I mean to say both kind of investment to and investment from abroad. Okay, investment by rest of the world in share of Indian companies, real estate in India, such investments from abroad are recorded on the positive side. I mean to say the credit side, as they bring in foreign exchange, right? So, and if any kinds of investment by Indian residents in share of foreign company or real estate, such investments to abroad are recorded in the negative side. I mean to say the debit side. Simply means if something is going out of the country, that is going to be negative or debit. Something coming into your country, that is going to be the credit or the positive side. So investment to and from includes two type of investments. See, we all have heard about the FDIs. So what is FDI? FDI is referred to the purchase of an asset in rest of the world. So such that it gives direct control to purchase over the assets. For example, I just give an example like acquisition of firm in a domestic country by a foreign country, or it can be transfer of fund from the parent company abroad to the subsidiary company in domestic country. So FDIs can also be a kind of an transaction, right? Like there are others, portfolio investments also. What are portfolio investments? Portfolio investments refer to the purchase of financial assets by the foreigners that does not give the purchase control over the assets. Like a foreign institution investments, which we called it as FII, is also known as portfolio investment. For example, purchase of sales of foreign company, right? Purchase of foreign government bonds are treated as portfolio investment. Apart from this portfolio and FDI investments, there is an exchange in foreign exchange reserves also, change in foreign exchange reserves. Now, foreign exchange reserves, what is it? Foreign exchange reserves are the financial assets of the government held in central bank. We all know this. So, a change in the reserves serves as the financial item, and that is to be included in India's balance of payment. So, any withdrawal from the reserves is recorded on the credit side, and any addition to the reserve is recorded in the debit side. So it must be noted that the changes in the reserves are also the part of balance of payment. So I have discussed current account, capital account. Now, if you talk about the equilibrium, how you are going to equilibrium the deficit and surplus. So sometimes what happens that the country suffers from the deficits. Sometimes the country suffers from the is having the. Hello, 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 hello. No, ma'am. Hello, no, ma'am. Hello, ma'am. Are you able to hear me? Hello, hello,
Yes, ma'am.
ma'am. My voice is coming.
Yes, your class is ending now.
बीच में डिस्कनेक्ट हो गया था मैम.
नहीं 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 ठीक चल रहा था.
मेरा
ओके
अच्छा हाँ ठीक है.
I'll stop.
Actually मेरा आवाज मुझे इको कर रहा है.
Somebody is opening. Open. You finished
Please,
your class, na?
I request everyone to mute.
It's time, na? You finished
Hello?
your class.
Yes. Ma'am, can I continue?
It's over, na?
Yes.
It is over,
Hello.
Pallavi.
But my class is supposed to be half an hour more, no?
Yeah. Sorry. Continue.
Yes.
continue.
मेरा आवाज इतना इको कर रहा है. मैम मैं अपना कान
Ma'am,
से हेडफोन
hello, ma'am. Your voice is echo due to main reason is your two ID is showing in Webex, ma'am.
I am not able to hear. आप कुछ बोल रहे हैं शायद इट्स इको हो रहा है.
हाँ मैम, आपका वॉइस इको हो रहा है ना, ड्यू टू रीजन क्या है, आपका 2 आईडी शो कर रहा है वेबएक्स में. 2 आईडी आर शोइंग मैम एट अ टाइम.
अच्छा 2 आईडी
यस
शो कर रहा है.
ड्यू टू दिस रीजन योर वॉइस इज इकोइंग मैम.
ओके लेट मी चेक. हेलो अब ठीक है.
मैम स्टिल
ठीक है अब. हेलो हेलो. Okay, I'm continuing with the class. Okay. हेलो अभी अभी इको हो रहा है क्या? मेरा आवाज अभी भी इको हो रहा है. Some problem. Yes. हेलो
मैम अब ठीक
कोई
है.
जवाब दीजिए.
इस
अब
वन
ठीक है. ठीक है.
हाँ अभी
Okay,
ठीक है, अभी ठीक है. 1 आईडी इज शोइंग मैम राइट नाउ.
ठीक है. अच्छा और मेरा पीपीटी दिख रहा है आप लोग को? नहीं पीपीटी शो हो रहा है?
नहीं हो रहा मैम.
नहीं हो रहा है.
अभी हो रहा है मैम, हो रहा है.
ओके ठीक है चलिए. Okay. So I was discussing about the equilibrium, deficit, and surplus in balance of payment. See, equilibrium is a position. Equilibrium in the balance of payment is said to exist when the values of credit item in the balance of payment exactly matches the value of debit item. Okay, but this is not the real thing. Actually, the balance of payment never happens to be balanced. That is to say that the country's receipts and balance with the rest of the country is going to be equal. But it should be noted that the balance of payment equilibrium is not possible, is not always possible. That is what I've written in the slide. It means that whenever if you want to have that the debit and credit should be exactly equal, that is not going to happen. So balance of payment surplus arises when the items on the credit side are greater than the debit side. Okay, so when you are having a positive, when you are having positive of more transactions than the debit side, this means that the country reserves are increasing. A deficit in the balance of payment account arises when the items on the debit side are greater than the items on the credit side. What does it mean? It means that the nation is spending more than it is earning. तो जितना कमा ले रहे हैं उससे ज्यादा खर्च कर रहे हैं. The deficit means what? Deficit means the reserves of the central bank are running down or its foreign debts is rising. Right. So if you specifically in my slide, you can see I have discussed balance of payment surplus. So what is balance of payment surplus? Balance of payment surplus means that the flow of resource into a country from the rest of the world is greater, right? Than the outflow of resource from the country in the period under consideration. It means that the balance of payment is always considered under a period of time. And under that period of time, we will check whether the flow of resource into the country or outside the country is more or less. It can be regarded as a situation in which the countries export more than exports during a given period. Okay, so a balance of payment surplus is always a thing of joy for a country because it implies that citizen of a country would be better off. Always the citizen of the country will be in a favorable situation, right? So balance of payment is always, if it is going to be surplus, then it is a positive sign for a country. Now the question arises, a balance of payment surplus, what does it offer to the country? How it is going to be the beneficial? What are the economic effects of a country and the citizens? So a balance of payment surplus often brings about the favorable economic effects to a country. Like number one, greater net income. Your country's income will increase. Your debts will be are going to be retired. You will have a quickening of the economic activities, more production, distribution, consumption, all these things, investment will be there. Inflationary, oh my God. Okay. So inflationary tendencies, you can see that inflationary situations are going to be there, but in the long run, it is going to be controlled by the different steps taken by RBI, which we called it as a monetary policy. Okay, so balance of payment is always favorable for a country. Now, if we move to the next slide, I'll discuss about balance of payment deficits. Now, what is a balance of payment deficit? A balance of payment deficit means a country is importing more. You are bringing in the commodity to your country more than you are exporting. So it is obviously not going to be a favorable situation for a country, because every time you keep on importing, you have to make payments for that. It implies that more resources go out of the country that than the resources which is coming into your country. Okay, so it is clear that a balance of payment deficit is not going to be good for a country. As a result, once a deficit occurs in the balance of payment, the government quickly takes a number of measures to rectify the debts. Now the question arises that what are the causes of balance of payment deficit? भाई ये balance of payment deficit किसी भी country में होता क्यों? Why is it so that our country is running into loss? We are having more and more of debts. We are going to pay. Our foreign currencies are going out of our country. Why? So the first point which I have written, loss of market. Loss of market. See, if we are having a good trade relationship with the rest of the country, or if we are maintaining a good transaction with the rest of the country, then obviously you will see that the balance of payment relationships are going to be better. So since the balance of payment is a relationship between the receipts and payment of a country, if you will find that there is a fall in the level of country's export, it will lead to what? If there is a fall in the export, it is going to lead to a poor export earning with a negative impact on the balance of payment. Obviously, the export, whatever export you are going to make, that should give an earning to you. Why I'm saying so, you will say that obviously if there is some export, the earning will be there. But then the important thing is that whether that export earning is going to add to your money, or it is going to be again a negative thing for you. See, if you're producing certain commodity and if the cost of production of that commodity in your country is very high, then obviously if you are doing the export of that particular commodity, even if you are earning the export earnings, that is not going to be good for your country. That is the reason why the concept of comparative advantage is there. whatever resources, manpower, or the different kinds of things that you are using in order to produce the commodity, that should be comparatively cheaper, right? Then only if those commodities are being sold, it is going to add to your profit. So if you are, if you will see that there is a loss of market, if you're not having a good market, like obviously now, like after the COVID and all that, we can see all the transactions with the rest of the countries is badly affected. Now the export and import relationships, the export and and export terms are not going to be good. What the economics can forecast, right? So in that case, if you're losing a market, that means what? You are losing the market for doing export. Next point, what I've written is excessive visible imports over invisible import. See, anytime there there can be a rise in the level of import without a corresponding increase in export. It may happen that you have to import more commodities. Okay, see, we all know there's a product life cycle. So initially, when you are increasing with your production activity, or if you are starting up with a business, obviously you need certain technology, right? So if you are importing those technology, obviously you have to make the payment, and ultimately it will take a time when your commodity will be finished and you are going to sell that product to the customers. You will get the return. So obviously during the initial time, what happens during the initial duration, you will see that there is a rise in the level of import. It may be import of raw material, it may be import of technology and all that. But at that point of time, ultimately if you think that okay, we are importing technology, we should have profit. That is not going to happen. Okay, so maybe that the time period which you will take in order to start your export activity, it will take time. But if the level of imports will rise, then it is going to take your country into the deficit side. Balance of payment deficit will likely to be occur. Third point which I have written is exchange rate. See, a country with an overvalued currency will likely to import more, and a country less overvalued currency, or a vice versa. It means that this would lead to the countries to pay more than it is receiving, and as a result, experience of balance of payment is going to be deficit, right? So a country with an overvalued currency will highly import more and export less. And if a country's if a country currencies are not overvalued, then what will happen? It is going to you are going to export more, and your imports will be going to be less. Now the third point which I have written is the level of domestic price. Level of domestic price. Suppose a country with a high level of inflation. If a country, if in a country you are seeing that the price of a commodity is very high, it is likely to have a balance of payment distributed. Why I'm saying? Because in that case, you will see that its export will fall and its import will rise. Why I'm saying its export will fall? Because all the commodities that you will need, or the raw material or the labor cost, is going to be very much high. So in that case, if a country is facing an inflationary situation, if a country is facing an inflation, in that situation, what will happen? In that situation, you will see that your exports are going to fall down and your imports will rise. You will find that the foreign commodities are going to be cheaper for you, rather producing the commodity at your own country. So if the country is having a higher level of inflation, you will see that the exports will fall and its import will rise. Next point I've written is interest rate. A higher interest rates attract the foreign capitals or not? Of course, yes. So if your banks, if the financial institutions that is giving higher interest rates, it is going to attract the foreign capitals, and hence, if the foreign capital will come to your country, it is going to bring a favorable balance of payment. And if there is a lower rate of interest, that could lead to capital flight, because in that situation you will think that it's better to invest abroad rather to keep the money in the bank or to invest in some financial product, right? So this is a situation. So this would lead to a state of disequilibrium. Next point I've written is income growth. If the if you will see that the nation's income is increasing, obviously your demands for the imported commodities is going to be high. An increase in the nation income will usually cause increased demand for imports. This actually will lead to the adverse, or you can say that it will going to be affect the balance of payment. So if your income is increasing, our pattern of investment or our choice of commodity will also change. We will then prefer to purchase the foreign commodities. We will we will prefer to have demands of more imported commodities. So you will see that in some way, if the income of the people of the country population increases, that is going to bring an adverse balance of payment. Now the question arises, how to correct this? What are the measures that are there to control the balance of payment deficits? See, I'm just reading out from this slide what I've written. Countries normally aimed at surplus balance. It is obviously very true. We always want to have a surplus balance. A deficit is a matter of concern. However, the effect of deficits depend partly on its cause. If it is due to loan or investment overseas, it may mean that a country is increasing its wealth abroad and so strengthening its future current account through the results of inflow of interest and profit. What does it mean? It means that if your deficit is increasing in a way that you are investing your amount, or if it is due to loan or any kind of investment you are doing abroad, so that investment will obviously in a long run is going to attract or is going to bring some wealth into your country, right? So ultimately you will see that it is going to strengthen the current account through the result of inflow of interest, or it can be inflow of the profits. But on the other hand, deficit on current account mean that the nation is spending more than it is earning. Okay, this is similar to an individual living beyond his income. So it is just a reflection that a country is earning less, it's having its resources less, but then we are investing more and more, right? Okay, so a simple example, like an individual is earning less and it is having a long list to spend. Now then the next question arises that so payment of deficit especially stands to a greater threat to a country, right? And especially if you are a country who is developing, a country with a balance of payment deficit can either adopt the temporary measures. So temporary measures, actually I mean to say, are those measures which are aimed at arresting the falling down situation. Okay, whatever decline which is there in the economic situation, or in the long run, it tries to give the solution. Okay, I mean to say, it is an activity. Temporary measures are those activities which will actually lead to overhauling of the whole economy. So temporary measures are पहला point जो मैंने लिखा है, that is borrowing. So obviously for a country with a deficit, as a part of a temporary measure, what you can do, you can borrow the finance, right? So borrowing means what? You can borrow from IMF, you can borrow from the wealthiest country, US, Germany, France. So these are called temporary measures. See, again, it is going to bring a threat to your country, right? If you're taking some loan from IMF for some developing country, a country cannot raise the economic activity or cannot be in a well-off situation by taking the loans from the other country, right? The next point, so that's the reason, that is the reason why these points are under the temporary measure. The next point which I've written is reducing import. You all can explain this point. Reducing import is what? It means that a country needs to reduce the import, especially if your country is having a deficit in its current account. This can be done how? By the use of uh, steps like quota on imports, right? You're putting a restriction on the imports, or you by the use of tariffs also. In that way, you can reduce the imports. To the imported commodity you can put a check on that by having more by fixing a like a limitation that how much commodity can be imported to your country. Third point which I have written is controlling the flow of capital. See, controlling the flow of capital, see, if a deficit is there in the balance of payment, it is obviously reducing the nation's reserve. Okay. So this may be relieved of by the government restrictions on investments or the capital flow abroad. These can be the two way only. The government can restrict on the investments, or it has to other way the capital flow which is happening abroad. However, these measures can only be used when the deficit is in the capital account. In case restricting the flow of capital does nothing to relieve our deficits in current account, right? So it is a crucial part of balance of payment which need to be understood that if you have to overcome this deficit, you have to, or I mean to say, the government will have to control the flow of capital. Now, see that you can also take the loan from the IMF. Country can equally approach or seek assistance from the international agencies, monetary funds, IMF, okay, through these special facilities. Why I'm saying? Because if you are being given the fund from IMF, again it is going to bring balance of payment deficit in the longer run. Okay, IMF loan, whichever country is taking, again that loan has to be repaid back. Again that loan has to be returned. Now the next long-term measures, if you say export, see, expanding the export can be an option. Expanding the exports means, see, direct government subsidies to the exporters may also help the country. If the government is giving giving subsidies to the companies which are exporting, then it will basically encourage the firms to export more and more. Or the government can also give the tax incentives, right? The government could also try to assist the exporters by helping to promote, or you can say to advertise their product through different trade fairs or by through different exhibitions, providing information about the overseas market, arranging the loan on favorable rates of interest. So these can be the different steps which the government can take. Ultimately, the government need to support those industrial setups which are doing the export, right? So deflation. Now deflation can also be a long run measures. So deflation, actually this is achieved through a tight monetary policy. And why the it is deflation is actually possible if the monetary policy is there to retard the inflation which is there, or drive up the interest rates, at least in the short. See, the tight monetary policy can reduce the country's rate of inflation, and thereby, if the rate of inflation is controlled in any country, it is going to lower down the price relative. Why I'm saying relative? In relative to the other countries. If the rate of inflation is very much high, then obviously it is not going to bring a solution to a country. That's the reason why with a tight monetary policy, the government can reduce the rate of inflation. This would make its export relatively cheaper, because previously I told you, if the inflation is there, then what will happen? The exports will become very, very costly. आप commodity कैसे बनाएंगे? तो बहुत costly हो जाएगा, inflation रहेगा तो. So if the deflation is there, this will make the exports relatively cheaper as compared to before. This will promote the exporters to reach the overseas market. It will, if the inflation is being controlled, then it will also discourage the import. अब पैसा ही नहीं है तो खरीदेंगे कहाँ से? ठीक है? Imported commodities आप खरीदेंगे कहाँ से? This actually it, or moreover, if such kind of situation is there, it can also generate the flow of investments fund into the country, since the interest rates are going to be high. So if the government is improving the interest rates, the investors or the companies, they will increase the investments in different sectors. It can be primary, secondary, or whatever sectors. So if the flow of investment funds is going to be there in the country, then obviously it can be a long-term solution for overcoming the balance of payment. Now, next point which I have written is deflation, devaluation. Devaluation, it seems, this means that there is a reduction in the value of the nation's currency. That is, the rate at which it can be exchanged into the other countries. By devaluating a currency, a country can make their products cheaper to the foreigners. And if the products of the countries are made cheaper for the foreigners, it will encourage the export. Similarly, if the devaluation will make imports more expensive, then what will happen? Then it make the local currencies cheaper, so that the citizen of the other countries will give less of their currencies to purchase goods from the countries with the devaluated currency. So devaluation, by increasing or by the rate at which the currency of a country can be exchanged with the other currency, can also be a very good tool, or you can say it can be a long-term measures for a country to improve the balance of payment. Now see, there are different problems related to devaluation. Like I have written, the success of devaluation depends upon how the foreign demands respond to the cheaper export price. Devaluation, when used to correct the balance of payment deficit, make imports very expensive. So there are some problems with the devaluation. Inflation. See, by making the imports very expensive, devaluation leads to a rise in the cost of machines and raw materials used. So I was discussing about devaluation lead to actually a fall in the government revenue as the result of decrease in imports. Devaluation can also lead to the deterioration in the country's terms of trade, since a country that devaluates its currency will receive less for its import and pay more for its imports. Right. So we will discuss all these things. I will have more classes with you this week. Okay. So actually, I have come to the end of this topic. Like in conclusion slide, I'm there. So in conclusion, you can say that every country is striving to maintain at least a balance in its balance of payment account. This is because it is going to impact the business activity. Okay. So I've come to the end of this balance of payment. To go through these slides, if you have any problem, in the next class you can come up with your problems. Right? So in balance of payment, particularly we have studied what is balance of payment, what are the different components of it, why the balance of payment deficits are there, and how to combat, or what are the different temporary and the permanent measures to balance the deficit balance of payment. Right? Okay? Okay, Rumna ma'am?
Okay, ma'am.
Okay.